Hi, I'm Rick Kaler. Thanks for joining me. Well, paying off a home mortgage prior to retirement is one of the top priorities of most homeowners. Affordable housing contributes greatly to financial independence. In many cases, paying off or refinancing your mortgage can give you some valuable financial breathing room. If you're younger than 40, funding your retirement probably comes first. That is, before paying off a mortgage. Put your investment dollars into a 401k plan or IRAs or some other retirement plan that your employer offers before you start paying off your house. The mortgage interest tax deduction really is more of an emotional rather than a financial reason to keep a house payment. The deduction is only a percentage of the total that you pay out, so it's a relatively small benefit. And it's far outweighed by the larger benefit of not having a payment. Plus, there is some talk in Congress of us joining the Canadians in doing away with the mortgage deduction altogether. For homeowners over 50, focus on paying off the mortgage. In some cases, it might even make sense to do so by taking money out of your investment portfolio. If, for example, part of your portfolio is in a money market account earning less than 1%, and you're paying 5% on your mortgage, it's a no-brainer. Pay off the mortgage. Then you can make a monthly mortgage payment back to your investments. It's usually not a good idea to pay off the mortgage by taking money out of a 401k or an IRA or some type of retirement plan, however. Of course, unless you're perhaps over the age of 59 and a half, you're in a very low tax bracket and you have a low mortgage balance compared to your investments. Otherwise, you might be better off to keep the mortgage rather than pay the taxes and the penalties on the withdrawal from your retirement plan. Now, I'm biased toward having a paid off home at retirement because it allows you to live more comfortably on a smaller income. However, this is an individual decision that really comes down to how you will sleep at night. For many retirees, the increased cash flow and security of living in a paid-off house, well, it's worth all the effort. Others might prefer to make house payments and leave their investment funds untouched. Let's talk a little bit about refinancing. Refinancing your house at a lower interest rate isn't going to automatically save you money. There's always a cost to refinancing. Compare the total remaining interest you will pay on the current loan with the total interest you'll pay on the new loan, plus the closing costs. It's crucial you remember those. Comparison shop amongst at least 2 or 3 lenders to get the best interest rate and the lowest refinancing costs. Just this week I saw a client that was looking at a refinance going from a 4.25% mortgage to a 3.75% mortgage. Relatively low balance, and the refi costs were $5,000. I think another one was $3,000. And when we crunched the numbers, it just wasn't worth it. If you have a short-term mortgage, so much of your payment is already going to principal, that refinancing doesn't make sense. The same is true if you have less than about 5 years left to pay. So if you plan to sell the home soon, you need to compare the interest savings and the associated refinance costs for those number of years rather than the remaining life of the loan. So if you've got a balloon mortgage or that's coming due in 3 years and it's a 30-year loan, or you're looking at moving in 3 years and you have a 30-year loan, you look at the cost over the 3-year period, not the 30-year term. So it's pretty important that you know, why do I want to refinance? Is it to save money on interest or to lower your payments? If refinancing extends the loan period, you could end up paying more in total interest, even with a lower rate. Now that might be a good choice if you're having trouble making payments, and the longer term could help you stay in the house. If you can refinance for a longer term at little or no increase in the total cost, then go for the longer term. The lower payment gives you more flexibility in case of a job loss or other crisis. And you can always choose to prepay to save money, that is, pay more on the loan every month. There's no hard and fast rule here about when it's best to pay off or refinance your mortgage. The bottom line is to make the choice that's going to help you live more comfortably, both emotionally and financially, in your own home. Thanks for listening.